As the oil price surged, stock markets in Asia plummeted. Worst affected were Asia's industrial giants, Japan and South Korea, that rely heavily on imported energy, with Tokyo's Nikkei index losing more than 5%. And South Korea's government putting a cap on domestic fuel prices for the first time in decades, trying to steady fraying nerves.
Given that's difficult to predict how the situation will unfold, our government must prepare proactive measures with a heightened sense of urgency, keeping even the worst-case scenario in mind.
Asian oil producers like Malaysia and Indonesia have been shielded in part from the sudden rise in crude prices, but across the region there are fears about the effects of this conflict on interconnected economies and industries. With the ripples of this war spreading far beyond the Middle East, there are growing concerns about the wider impact, such as on Asia's high-tech manufacturing sector. And then for everyone is the looming fear of inflation.
And certainly economic growth will slow and the inflation will pick up. And this is the worst case scenario we saw when the US and Israel started to attack Iran, and everything is getting out of control now.
And should the oil price stubbornly remain above the $100 mark, the question seems to be how economic damage and higher prices for ordinary consumers can be averted. Rob McBride, Al Jazeera, Kuala Lumpur.